Let's talk mortgages in Kenya. Kenyans are increasingly avoiding them, and for good reason. A mortgage is a legal agreement in which a lender lends money at interest called mortgage rate, in exchange for taking the title of a debtor's property, with the condition the title will be transferred to the borrower upon completion of payment of the debt. Therefore, the mortgage rate is the rate of interest charged on this debt, mortgage. It is determined by the lender and can either be fixed or variable. When purchasing a house, there are three main types of mortgages to choose from: fixed rate, conventional, and standard adjustable rate. All have different benefits and shortcomings that assist various homebuyer profiles. The most common types of mortgage loans offered in Kenya are: A. Owner-occupied residential mortgage loan, designed for borrowers who wish to buy a home to live in. B. Investment residential mortgage loan, designed for borrowers seeking to purchase an investment property to rent/lease out. C. Construction mortgage loan, designed for borrowers seeking to build their property. The contractor or professional overseeing the construction is sent the borrowed funds. E. Equity mortgage loan, designed for borrowers seeking to access funds locked in home equity. You can use the funds borrowed for other purposes since the property is used merely as security for the funds borrowed. As a homeowner in Kenya, you may have experienced the following issues: hidden fees, long processing time, frequent changes in terms and conditions. Kenyans have been hit with one of the highest interest rates in the world, and they are paying dearly for it. But there is an alternative to traditional mortgages, one that may be a better option for many people: rent-to-own homes. Mortgages are a form of debt, and as with any form of debt, borrowers have to pay interest on it. Mortgages also tie up your money for years at a time. You can't use your cash for anything else until the mortgage is paid off. Let's look at the numbers. Here's what you need to know. 80% of the mortgage market is controlled by KCB, Stanbic, StanChart, ABSA, Co-op, Equity, NCBA, and HF Bank. The average Kenyan with a mortgage has a 9.2 million shillings mortgage repayable in 12 years in 2021. About 88% of the mortgage loans were on variable interest rates. In 2021, this meant 7.1% to 15% interest. Given it's variable, banks can increase interest. Therefore, in 2022, this means 11.5% and 18.18% interest. The most expensive bank for mortgages is Middle East Bank, where a 9.2 million shillings loan expected to repay 24.9 million shillings in 12 years. The least expensive bank for mortgages is Bank of India, where a 9.2 million shillings loan expected to repay 17.5 million shillings in 12 years. KCB has the most mortgage accounts, and charges a minimum interest of 13%, with the borrower paying back about 20.74 million shillings. Co-op Bank charges an interest of 15.6%, with the borrower paying back about 20.53 million shillings. At Equity Bank you'd pay 19.5 million shillings for the same repayment for a 9.2 million shillings mortgage average. Stanbic, 19.19 million shillings. StanChart, 19.08 million shillings. NCBA, 18.82 million shillings. Housing Finance, HF, 18.71 million shillings. ABSA, 18.31 million shillings. Stanbic and NCBA offer up to 105% mortgage, which covers fees and commissions charged by external parties such as lawyers and surveyors, while other banks need customers to have a deposit and offer only 90% of the property value. At monthly payments of between 118,065 shillings and 150,137 shillings, the data shows that very few people dependent on salaries can tap mortgages. Many would require to be either in good-performing businesses or running a mix of employment and business to keep up with monthly payments. The data further shows that the average mortgage for a 3-bedroom house in Nairobi is about 5.5 million shillings, which is equivalent to 34 times the monthly salary of an entry-level employee with no dependents.